What's up guys? Welcome back to another video. Today we're going to talk about my 8 favorite ETFs with Charles Schwab. As always, I am not a financial advisor. This is not financial advice. Do your own research. This video is for entertainment purposes only. In my last video, I recommended a Vanguard ETF, MGK, and someone left a comment saying, "Oh darn, I don't have a Vanguard account. I would really like to buy that ETF." Let me just clear that up right away in that an ETF acts like a stock. With any brokerage account that you have, you can buy and sell any ETFs offered through various banks. Doesn't matter if it's a State Street or a Fidelity or a Vanguard or a Schwab ETF, any brokerage account can buy and sell them. Ideally, you're with a no-fee commission brokerage account that offers $0 trades. On my channel, I always recommend the big three, Fidelity, Schwab, and Vanguard, but if you're with Robinhood or M1 Finance, that's fine too. And ETFs are baskets of securities or stocks or bonds or some kind of index that wants to be conveniently tracked. In this video, we're going to talk only about stocks and bond ETFs, but you can get ETFs for almost anything. And with a stock ETF, most of them track indexes because that's easier to predict and manage. Now, ETFs are different from mutual funds. Mutual funds have been around since the 1800s. Mutual funds were designed as a way to share risk and share reward for a broad diversification of stocks in a portfolio. But mutual funds have always had limitations. Usually you have to have a large expense in order to buy into the mutual fund. Mutual funds that are actively managed can be more expensive and maybe not yield you a better return. Additionally, mutual funds only let you get in and out of the mutual fund usually at the end of the day. So in the 1990s, the ETF was born and it exploded in popularity. An ETF acts like an index fund, acts like a mutual fund in that it is a broad diversification that shares the risk, shares the reward. But an ETF trades on the New York Stock Exchange. So you can jump in and out of it as many times as you want in a single day. You can do options and derivatives and all the other things that you can do with individual stocks. And what an ETF is a share of a fund that owns shares of companies. So, or bonds, but most of the ETFs I'm going to mention today are stock holding indexes. And when you own a share of that fund, you own a share of the value of that fund. Today we're going to be talking about Charles Schwab ETFs because that's what people requested in the comments section. And I love Charles Schwab. This is who I, in my personal brokerage account, use. Their ETFs are all very low-cost options to invest in the market. It's ideal for buy and hold investors and retirement investors. Schwab ETFs do pay dividends on a quarterly or monthly basis, and all of their ETFs are very well diversified. They're generally very safe index funds in order to invest in. Likewise, Schwab is a very well-known company, and these are very well-known ETFs. They are widely traded, so if you buy into them, you want to have confidence that you can sell out of them. These are the 8 Schwab ETFs that we're going to talk about today, and this is Schwab's 1000 Index ETF, Schwab's Total Market Index ETF, Schwab's Large Cap Growth ETF, Schwab's Small Cap Index ETF, Schwab's High Dividend Yield ETF, Schwab's Total International Market Index ETF, Schwab's Corporate Bond Market ETF, and Schwab's US Gov Bond ETF. To view what Schwab ETFs are available, you can go on their website. You don't need to be a client yet, and you don't even need to be logged in if you're a client. I'll show you how to find them. When you go on Schwab's main page, go under What We Offer, and then ETFs, and this will bring up their ETF page. Click on Explore ETFs at Schwab. At this point, you can then scroll down, and it kind of has them categorized into three boxes. Fixed income, so this would be bonds. International equity, so this would be international stocks. And then domestic equity, and this is US securities. So total, I think they have about 25 ETFs managed by Charles Schwab Investment. And in this video, we're going to go through 8 that I think you should know. The first ETF is the Schwab US Broad Market ETF, stock ticker symbol SCHB. And this just seeks to track the entire US stock market. So if you want a one and done, set it and forget it investing strategy, this is the only ETF that you would technically need to be invested in, because it will just give you whatever the return of the entire US stock market would be. If you scroll to the bottom, it'll show you exactly what you're invested in. So 27% information technology, 14% healthcare, 11% consumer discretionary. It kind of shows you year to date how they're doing and the 1 month average. If you want to look at the top 10 holdings, and you're in all familiar companies, 5.2% of the portfolio is Microsoft, 5% is Apple, 4.3% is Amazon. If you want to click on all holdings, it'll show you exactly the entirety of what you're in and how much. And if you look right here, there are 2,406 companies that you're invested in if you buy this ETF. We can Google how this fund has performed over its lifetime. Once again, symbol SCHB. And it's done very well the last 10, 11 years. If you were to have invested in this ETF 10 years ago, when the share price was at $25, it's currently at 76. So even without dividends reinvested, you would have tripled your money. So if you had invested $100,000, you would currently have $300,000. With dividends reinvested, you would have done even better. The next ETF is Schwab's 1000 Index, and this is simply the 1,000 largest companies publicly traded in America. The stock ticker symbol is SCHK. I don't know why, but Schwab does not have an S&P 500 index fund. You know, for Vanguard, it's VOO. For State Street, it's SPY. Why Schwab chose to not create a 500 largest index fund and they went with the 1,000, I don't know, but this is still a great fund, and there's a lot of overlap with the last ETF. The percentages, information technology, healthcare, consumer discretionary are very similar. The top 10 holdings, we have Microsoft 5.5, Apple 5.3. We can actually just go back and, you know, Microsoft here was 5.2, Apple was 5.0. So if you're in just the 1,000, once again, a lot of overlap with the total stock market, but you're more diversified. You have more companies in the holding. If we click on all holdings, we can see exactly 1,000 different companies you will be invested in if you buy this ETF. The next ETF to consider is Schwab's US Large Cap Growth ETF, and this basically seeks to track the large cap stocks that are growing the most rapidly. So this is the stock that is equivalent to Vanguard's MGK, Mega Growth Value Index. And when you look at what is this fund invested in, 38% information technology, 16% consumer discretionary. This is where everyone is dumping their money. And I said this in my last video that I think a bubble is being created. I don't see this ending until the current financial situation in America straightens out with the pandemic and everything. But look at year to date, up 16%, up 11%. Every other sector is down. We'll go ahead and look at the holdings for this ETF, and it's Microsoft, almost 10% of the fund. Apple, Amazon, Facebook, Google, Berkshire Hathaway, Visa, United Health, Home Depot. Let's see if, there it is. Yeah, Tesla, 1.35% is in this ETF. So all of the hot stocks that are just exploding right now in value, you know, doubling their share price, they're all contained in this large cap growth ETF, and I see this fund doing very well for the rest of this year. When we check out this ETF on Google, you can see it's done very well. If you were to have invested in this fund a year ago, July 2010, share price was at 24. It is quadrupled, more than quadrupled, even without dividends reinvested the last 10 years. So once again, if you had 100,000 bought 10 years ago, you'd have over 400,000 today. Next ETF to consider is Schwab's US Small Cap ETF, and this gives you a exposure to the small cap stocks. So you're not going to have Facebook or Apple or Amazon in this ETF. It's only going to be smaller growth stocks that are not included in the S&P 500. So when we go down, it's a lot of healthcare companies, still tech, industrial, financials. Let's look at their top 10 holdings, and it's going to be a lot of companies that maybe you're not familiar with. I mean, I've heard of Etsy, but there's 1,728 stocks in this, and this is all smaller companies that hopefully you want to see pay good dividends and continue to grow. When we Google SCHA, it's giving us a dividend yield of 1.25. If you were to have invested in this fund, let's see, July, so it's almost tripled, or more than 2.5 in the last 10 years. Once again, with dividends reinvested, it'd still be pretty good. It's currently down. Small caps have not recovered as well due to the recent financial turmoil in the markets. So if you wanted to invest in this fund, you might see a better return than large caps once the pandemic's over. The next ETF to consider is Schwab's US Dividend Equity ETF, symbol SCHD. And this just tries to collect as many of the highest paying dividend stocks offered on the New York Stock Exchange. Dividend investing is a completely different strategy that some people follow. I personally favor growth. I like stocks that are both growth and income, but this doesn't focus on growth. It focuses on dividend payouts, income. So the makeup of this ETF is completely different, with financials being the biggest, consumer staples being the second biggest. If we look at the top 10 holdings, we have UPS, Qualcomm, Pepsi, BlackRock, Texas Instruments. Let's go ahead and click on all holdings, and there are only 104 stocks in this ETF, which is interesting. But once again, it should be all of the stocks that pay the highest or best dividends. When we Google how this is done, it's saying the dividend yield is 2.26. A lot of companies have cut or reduced their dividends, so I'm sure that is affecting the dividend yield. When the economy is better, that will be higher. When you look at the share price, what it's done almost the last 10 years, it's basically doubled. So not as much capital appreciation as the other ETFs, but once again, dividend investing is a completely different strategy for some people. Next ETF is Schwab's International Equity ETF. This is a total world market index ETF for international companies. And you can look at the sector composite top 10 holdings. We'll go ahead and just click on all holdings and see which of these companies can we recognize, because these are international companies. We have Nestle, Toyota, Samsung Electronics, Royal Bank of Canada, HSBC. I personally don't choose to invest in international ETFs, international index funds, but other financial experts will say it is necessary for a three-part portfolio. My personal opinion is that a lot of America's largest companies are global companies. More people outside of America use Facebook than inside of America. More people outside of America buy Apple phones or use Windows Office than inside. So I feel like investing exclusively in US equities still gives me a broad international exposure to total global growth. If we Google SCHF and see how it's looked over the last 10 years, it goes up, it goes down. It offers a 2% dividend. This has not been a good decade for international index funds. The next ETF is going to be a bond ETF, not a stock ETF. So this is Schwab's 5 to 10 year corporate bond ETF. So these are debt bonds loaned to companies. So 83% is US corporate debt, 15% is non-US corporate. So maybe this is municipalities or states. When we look at top 10 holdings, we see Bank of America, AT&T, Citigroup, Dell, Morgan Stanley, CVS Health. These are very large American companies or international companies maybe that have taken on debt, and then they're paying premiums on that debt. So if you hold this bond, the bond will maturity, and the companies have to pay it back. In addition, you make a little bit every year on that bond. If you think that investing in stock ETFs is too risky and you can't handle the volatility in the market and you would like a more fixed or guaranteed income, then I highly recommend a corporate bond index ETF. The rate of return you'll get is close to 4 or 5%. Not as good as US equities, but way better than a normal savings account. However, if corporate bonds for you is still too risky and you can't handle even the volatility of corporate bonds, then you can buy ETFs that track US government bonds. So this is Schwab's US Aggregate Bonds ETF, symbol SCHZ, and this just holds a variety of US Treasury notes. So will this ever collapse, go down? Probably not. I think the US government would have to default on its debt, and that would be very bad. I don't see that happening in the near future. When you go ahead and Google SCHZ, basically the fund trades around 50, 51, 52. It's been going up as people maybe have been buying more bonds, and the dividend yield is 1.96. Seems a little high. It's probably going to go down in the near future as the Fed has cut interest rates. But once again, if you're looking for the safest investment possible, I would recommend this ETF. And there you have it, guys. For those of you who just love Charles Schwab and want to exclusively use their products and services, these are the 8 ETFs that I recommend that you know and consider investing in. And once again, Charles Schwab is great. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, consider subscribing to my channel. I talk a lot about finance and investing. And if you have any comments or questions, leave me one down below. I love hearing from you guys. And until the next video, take care.